Hey guys.
Greetings, everybody. Welcome again to another Aladdin A-Team restream broadcast on Twitter and on YouTube. We are very excited today. We've got a guest who apparently, like everybody turns out for. This is like a really big one with our friends from Superform, our new friends from Superform here for Protocol FX. And we are very excited to learn more about how it sounds like from what I'm hearing here is that you will be able to access yields for Protocol FX from any chain. And our buddy Blake is joining us from Superform today to tell us all about that, how that's going to work. But first, we'll do some introductions here. And so, as always, welcome our A-Team buddies. We've got Cyril joining us. How you doing, Cyril?
Hey, I'm really good. Very happy to be here tonight.
Absolutely, sir. We're glad you're here. And then, of course, the Protocol FX maximalist himself is CryptoVestor. How are you, sir?
Good, sir. How you doing? Good morning. Thank you for having me on here. Appreciate it.
I'm doing well. The Japanese central bank has appeared to have put a kibosh on all of their market shenanigans for now. So I think
they're not raising rates. I hear they want to keep them steady now.
We'll see. Right? Yeah. And then of course joining us as well is DeFi Advisor. How are you, man?
What's up, guys? Nice to be on.
Hey, man. How you doing?
Glad to have you here as well. And of course, our special guest for the day, Blake from Superform. Blake, how are you, sir?
I'm doing well. Great to be here.
Well, we are absolutely delighted to have you here today. And I will tell you my curiosity of learning more about Superform, especially when Cyril started telling me all about the capabilities of it. I was like, oh, this is going to be really interesting. I think this is like some features that a lot of folks in our community have been sort of clamoring for a while. And it sounds like Superform is really going to be very key to sort of like turbocharging FX's expansion onto other chains. And so maybe we can kind of go ahead and have you, Blake, sort of like introduce yourself, kind of who you are, how you got into crypto to DeFi and found yourself at Superform.
Sure, sounds good. I'm loving these llamas or alpacas.
Yeah, the llamas, yes, sir.
Yeah, loving the llamas. Yeah, happy to give a quick background. So first got into space in 2017. Was doing kind of an early actually NFT video game, probably prior to any NFT video games being successful.
Whoa!
Yeah,
really? Wow.
Yeah. I think we're like the third to announce an NFT game after CryptoKitties. It was an interesting time. We didn't actually ship it till 2018, but it was a very early time to be in the NFT space. Not a lot of investment happened in NFTs after that. So
you were pre-Axie Infinity?
Yeah, pre-Axie. I mean, they were around.
They were around, but
yeah, they were building. It was very few of us back in the day, but was a cool experience. Then flipped into the investing side. Joined Block Tower Capital in 2019, where I met my now co-founder of Superform, Vikram. We co-led Block Tower Capital's DeFi fund. So we were investing pretty actively across 15 different chains at the time. We had like a special vehicle within Block Tower that was a liquid DeFi fund where we could kind of invest max alpha into whatever we found exciting. That led us into very kind of deep rabbit holes within DeFi that you would find yourself in 2021. So we were, funds spread across all these different chains. We're actively farming and investing in the kind of early multi-chain days. That's where we came up with the idea for Superform. So basically, we're like, this could be an app. There's no reason that DeFi needs to be fragmented and, kind of this very terrible UX experience around just what should be an easy and fun way to make money. I think that's really what inspired us. since then, we've been building since 2022, and we just went live in open access a few months ago. But the short of it is we are a marketplace for yield. We're not a yield aggregator. I think that's everybody's first conception. But what a marketplace for yield means to us is kind of like Blur or OpenSea for crypto, or for DeFi, excuse me, where you can access other people's products. People like, protocols like F of X can distribute your products omni-chain to customers. And from a user perspective, they can access any vault on any chain in a single transaction, along with a lot of other great features. So that's our goal, is just to be an app that kind of abstracts away all of that complicated stuff in DeFi, bridging, swapping, changing chains, discovering new yield, and creating a product around that. So
this is really cool. This is really awesome, because it's so much friction for users to have to handle the best way to bridge from a chain to another chain, and how much it's going to cost to deploy assets there, and so on, and to bridge back. And so abstracting this is just awesome, really awesome.
Can you explain a little bit about how it, does the application, does Superform live on Ethereum on mainnet, and then it branches into all these other chains, or does it live somewhere else? And then, is it just, are there categories on your site, and then you just sort of add a protocol or something? Or
yeah, so we don't have a home chain. We are equally deployed on all of the EVMs that we support. So as of today, we're on 8, the ones you would expect, and we're moving into kind of newer L2 soon. So that will hopefully look like, Blast, Scroll, Linnea, like Mode, folks like that. Basically, we go wherever the DeFi ecosystem goes. But from a protocol perspective, the onboarding is permissionless. So we're built around the 4626 standard. So it's a tokenized vault standard. Kind of, I know you guys are familiar with it because you built on it. But for everybody that might not be, it's kind of like ERC20s are to tokens, what 4626s are to vaults, or in the NFT space, they use 721. So we felt when this standard was finalized a couple of years ago that it would allow us to create a true permissionless marketplace where somebody with a 4626 vault can list in one transaction, and then our infrastructure can immediately connect into that and allow for, basically calling those 4626 functions for deposit, withdrawal, whatever. That allows us to scale to hundreds, thousands of vaults seamlessly, versus trying to do like manual integrations and trying to make sure that every single vault could be supported. That's kind of how we got here. From a protocol perspective, it's just a form. Anybody can pull up, if you connect your wallet and authenticate, it's really simple to just paste in your vault address and then list the vault in a single transaction. You can then add in your metadata around a protocol page, and we do on-chain verification to link the deployer of a vault to the vault itself. You have to assign an on-chain message, and that then links those vaults to your page as kind of an additional layer of authentication.
Wow, that is insane.
This sounds like kind of like one of those sort of kind of like holy grail moments for DeFi, where the underlying layers sort of start to get abstracted away, which is kind of what you ideally want, right? And especially like for not only just for users, but even for people that are building protocols, like it just makes it so much easier. You put it on one chain, and then you abstract away sort of the accessibility of it, because deploying your protocol on multiple chains, and we've talked about this with FX about like, well, which ones are you going to expand to, and you have to weigh the costs and benefits of that. And so really from both a development side and from a user experience side, it seems like this sort of Superform's killer feature is both sides now don't really have to worry too terribly much about either one of those features. Am I understanding that correctly, Blake?
Yeah, absolutely. From any chain to any other chain is abstracted now. So as he was going through the deposit flow there, you'll see that we've used Li-Fi for bridge and socket, but Li-Fi is the primary routing mechanism for bridge and DEX liquidity. So they offer a ton of different options to get into whatever you're looking for. But from the user perspective, you basically are generating a quote on whatever your source chain is. So let's say it's Arbitrum, and you want to get into vaults on Ethereum or on Base. That quote that's generated will use Li-Fi for the bridge and DEX liquidity, likely using something like Stargate and 1inch under the hood. And then on the data side, we need to use data bridges. So like to secure that cross-chain message to make sure that it's not corrupted or does anything with those funds. We use 2 of 4 data bridges. Right now, 3, about to be 4 this week, but you can choose Hyperlane, Layer 0, Wormhole, and about to be Axelar. We require a primary and a proof of any interaction. So that's kind of the life cycle of a transaction from a protocol's perspective. Now, if you have a single vault, I still think it probably makes sense to deploy your vaults on an L2, like one L2 plus like mainnet. But if you have a vault on L2, those cross-chain interactions from other L2s, really, really affordable. You're paying a little bit of bridging and data fees still from the infrastructure perspective, but then you can just instantly one transaction into whatever vault you're looking for. So for protocols like yourself, if you guys want to be on just Arbitrum and then, say Base and Optimism, people can just bridge in a transaction, that totally works from a distribution point of view.
And Blake, first of all, is it like a kind of a deployment as a service? You know what I mean? For whoever want, like if a chain is already deployed, you say like, for example, on a specific chain, or maybe even an L2, all of a sudden you can become cross-chain pretty much instantly, if I understand.
Yeah, so we're not doing anything to your underlying vault. So like if your vault lives on Arbitrum or Ethereum, that vault and those vault shares are still within that chain. We do have a protocol kind of on top or underneath the back end and front end that you kind of were playing with there. But the protocol, what it does is when you spend from, let's just say chain A, so like I'm on Base and I want to go to your vault on Arbitrum, that I'm spending my gas funds on Base, and then that's transferring that money to Superform's destination chain contracts. Those destination chain contracts, once it meets that data from Layer 0 Hyperlane, gets deposited into your vault. Those vault shares, your 4626 vault shares, are then locked in Superform's destination chain contract, and you're minted back what we call a superposition, but it's a tokenized one-to-one representation of that underlying back on your source chain, which is Base. So now you have a tokenized asset on Base that represents your collateral on Arbitrum. We do that because users can then spend from one single chain to access everything, and you don't need to then bridge gas money to Arbitrum in this example. You, of course, still can if you want to, but this allows you to basically have single account, single chain abstraction into any number of chains that you want to go to. That's how it's constructed today, but we think that piece specifically is like really valuable for people that don't want to spend all their time managing cross-chain gas fees.
Yeah, so you handle the actual token situation because we don't have to worry about sending the token back to Base or whatever. Like you guys are doing like a receipt token in essence for that token that would have been issued by the 46 by the vault, right?
Correct. And by default, that's
interesting.
It's 1155 by default because we think the majority of our users are not interested in the composability of it to start. However, there are users that want that. They're saying, okay, well, what am I going to do at 1155? I wanted a 4626 or an ERC20. Right. There is a function that lets you convert your 1155 to ERC20s within the app, and then go use that in the rest of DeFi. So like we didn't want to break that like life cycle of that transaction. So it's like, let's say I really wanted those vault shares and I want to go do something with it. We've had a few use cases emerge from those superpositions. The first is from pawn.xyz. They're basically a peer-to-peer lending platform. You can borrow against superpositions, from like once it's minted into your wallet from whatever chain, you can borrow against that peer-to-peer. The second is a Superform specific use case called Superpools, where we're putting those ERC20s into like Uniswap, and now a user can swap into like yield on mainnet, but for the cost of an L2. So like the protocol or a market maker is minting that position, paying those bridging costs, just providing it as in an AMM for somebody to swap into, and then now users can just swap into it gas free. So like there are a few use cases emerging for superpositions. We're trying to grow that ecosystem for sure.
This is very interesting. But if I'm correct, when you let's say you want to ape into an FX protocol strategy from let's say Arbitrum or Base, you will cover the whole transaction costs from bridging and going into the entering the strategy, right? There's no pooling happening there, right? So if there's multiple users who want to do the same thing as I want to do in a couple of hours, for instance, is there some kind of pooling of the fees? Like, is it shared at some point, or is there something like that?
Not yet. Yeah, batching is on the roadmap for us. We have done gas campaigns where we've paid the cross-chain cost for users. We did one with Morpho. I think that was before your FFX protocol Morpho Vault that I think you just pulled up a second ago. But would love to, we could run another one back on that. We are working towards kind of like batching operations that will make that cost cheaper. So the first one that's coming out is multi-vault deposits, single transaction to any multiple chains and multiple vaults with multiple underlying. So like you could go from base and then one vault on Ethereum with ETH as the underlying, another vault on Optimism with USDT as the underlying, etc. So that's going to be live this week, probably next week, next week or so. Then the next one will be more like fundamental level batching where we're aggregating order flow and then executing to socialize those costs. But that takes a little bit more protocol work.
Yeah, I guess, and it also, it's always about matching people. It needs like lots of users on a specific strategy to be efficient. So
yeah, it's a little tough to scale like batching in the same way as it is like cow swap or something, which I'm sure you guys have used, because like order flow there is it's easier. It's one-to-one. Like we have a lot of people going into very specific strategies at specific times. So you really need like a high volume to be able to do any sort of batching with yield, because like they might have ETH, like they might be bridging ETH at the same time, but they're going into two different vaults. And so the math behind that's just a little complicated and something that we're working on, but is not live yet.
Okay.
What about the actual?
I have another. CryptoVest, I just want to ask something short about like how it's. Is there like some kind of a difference or differences with either like working through you guys or deploying directly? Like, what are the benefits and like, you know what I mean, Blake? Like, is there any difference for a chain if it decides to specifically go and deploy itself onto a chain, or whether they integrate with you guys? Like, will it work the same? End of the day, will the customer get, like, what's the upside and the downside, like the way you see it? Like,
yeah. So the great part is that, as you know, from your perspective as a protocol, your deployment is your own, and those 4626s you deploy wherever. We don't change anything. It's only about like how users are accessing that vault share. So like you could say that the downside could be that like maybe I as a user want that 4626. By default in Superform, you are getting a superposition. We do let you retain the underlying with a specific function called retain 4626 for really only advanced users, because otherwise that vault share is going to be on some random chain without you really knowing where it is, or potentially not having gas money. So it is an option, but like reserved particularly for advanced folks that you can see in the settings. But from like a deployment of a protocol perspective, you're just deploying your vaults on your own. And once you've deployed it, you list it on Superform, and then we can route users into it. It's not like we're not changing how your underlying vault works in any way. A good example is like with Morpho, they were only on Ethereum and they were on Superform, and they were trying to drive a lot of attention to Superform as a way to onboard their L2 users to Ethereum. They realized though that even on Superform, we're not solving the gas cost of cross-chain bridging to Ethereum. So like they were like, okay, well, we do still want to offer these vaults cheaply. So what they decided to do was deploy on base and list that on Superform. And now, it depends on the vault, but we make up something like 5 to 10% of, varying amounts of their vaults TVL. So like some are higher, some are lower. And they found a lot of success in that. Is like we've driven them a fair amount of TVL as a percentage of Morpho's base TVL. They still found deploying on base a valuable part of their strategy. But like, do they really need to go to another L2 now? Because these L2 to L2 operations are really cheap.
Yeah, so the TLDR here really is that we don't have to deploy as a protocol. We don't have to deploy on 8 chains. We can get the liquidity of all of the 8 chains onto one base layer
Yep.
And it simplifies it with one transaction, so you don't have to worry about swapping back and forth, bridging assets, then depositing separately. And so so you can aggregate all of the liquidity from all of the different 8 chains into one protocol, no matter where it lives.
Yep.
That's what I liked about
awesome.
the protocol. I saw it a bit like a DeFi llama, but on which you could just click and enter the strategy in one transaction. And I love this idea.
Awesome.
And for protocol like FX protocol, it's really cool because we obviously made the decision to deploy mainnet because we're building resilient next generation stablecoins and leverage tokens. And so we need to be on mainnet first. But there is tons of liquidity around other layers. And we have a unique value proposition, such as arUSD stability pool, which is now integrated on Superform, which is giving something like 17 or 18% APR with 6x ETH5 points, 2x eigenlayer points, and I believe 6 or 3x, at least 3x FX points by design, thanks to Superform, which is applying a ref code to the users directly, and this is only on mainnet basically. The token is bridged on a couple of other layers, but it can suffer from the other layers' liquidity. But thanks to Superform, like users farming in stable in whatever USDC strategy, for instance, can just swap instantly to the arUSD strategy on mainnet from any other layer, and that's just crazy usage, in my opinion.
Yeah, we're really excited about that. That fact alone is just like, for protocols like yourself, you have a very interesting vault construction. I was reading through all of the mechanics of it, and I was impressed with the design. It was really interesting. It's exactly the type of strategies we want to see on Superform. Is like, these are high yielding, high point strategies that really attract a lot of users. And sometimes they only work on a certain chain. Like, this strategy looks like it's very ETH specific. And so, like, how do we get more users in cheaply? We haven't set this up yet, but what we could do together, kind of live partnership discussions, right? Is the super pool idea. If you're already on Superform, we actually only have one super pool that's live, and that's with Steakhouse's Morpho Vault. But effectively, it's tokenizing that position on Arbitrum, I think is what was chosen. And now users can swap into that Steakhouse USDC vault on Arbitrum, but the vault underlying is on ETH, and the yield is on ETH. But now users can just swap in for like a cent on Arbitrum and Uniswap, and they get that. We could do the same thing for either the Morpho strategy or the primary AR strategy, and now like you get 1 cent access into Ethereum yield, and you're good to go.
Wow, this would be awesome. This would be like really awesome, and yeah, that would be crazy. And by the way, it's been released recently that AFX USD is on the way. So that's basically the same, but with FX USD, which is another of our stable coins. So that could be a second strategy live on Superform pretty soon as well.
That'd be awesome. Yeah.
I'm showing the arUSD strategy here. So that's a yield-bearing stablecoin giving. I don't know why it's displaying here only 10% APY, while here we can see 33% APY.
Yeah, that's a classic time frame issue. Okay. We're going to be adding in more controls on which time frame you're seeing. I think that's 7 days. You could maybe go to.
Yeah, because it's been raising pretty quickly the past coming days, so that's probably the reason why.
Yeah, we default to the longest time frame collected. It's a really as a kind of a interface for all yield. Showing yield in any way that's standardized is really challenging. So like for a protocol like yours, the most recent APY is probably the most relevant. But for some protocols, like let's just say Somalia, they're like trend trading. It's like a trading strategy. And so the most relevant time frame is probably the longest, is because what is the track record of XYZ strategy? And then others are fixed, like STI. STI has a stable rate. It's like, it is 8%. The historical average doesn't matter to you at all if they're programmatically adjusting that with their stability ratio. So it's like it's really challenging to find the balance there. So we're just trying to add more and more information, so the user can see, okay, like today's APY versus yesterday's APY versus a week and a month. So that's kind of our plan going forward.
Yeah, it makes sense, and that's very convenient. As you can see, the APY has been pretty stable. It's been raising recently. I believe because some people must have exited the strategy recently, probably to buy the dip. I don't know, but and as you can see, when you put the there's more information about the points here. I think it would be very interesting to see them maybe more easily when you on the page directly. I mean, because you have to open that little box to see all the points, and I mean the yield is nice on that strategy, but the points are crazy. It's like getting 6x ETH5 points with a stablecoin is a unique value proposition, and same as 2x eigenlayer points, for instance.
We're going to have a redesign soon on the vaults page that's centered around showing those multiples. So like right now, it's like a little unnecessary to have to hover over it to just see what's happening. We're going to be reorganizing it to have your yield right next to what the points and multipliers are for each of those. Not to mention you're earning Superform XP. We have a whole Safari program that's at the bottom tab there, but basically, that's what we're marketing in the top is like your XP you're earning. We just started a new tournament like an hour ago, so but it's like you're earning Superform on top. We're just trying to make it clear in the UI that what's happening there for the user.
So just as a kind of a for instance, and Cyril, if you could bring the page up with arUSD on it there.
Yeah, sure.
I kind of like to maybe just walk through like what the user experience is, so people can kind of expect sort of what it looks like to jump into the Superform here. So this is kind of sort of the landing page, I guess, for the app, and then they would go to vaults and or explore or search for protocol effects.
Yeah, my personal recommendation would be go to protocols, and then your protocol will be fastest because we're about to implement a K-bar search bar as well, so you'll just be able to type it in. But there you go.
Okay.
There you go. And then there's vaults.
Okay, so then users can select. So there's Aladdin's arUSD vault, which I'm guessing just deposits funds into the arUSD stability pool. And so then you go to this vault, and then you just deposit. Do individuals need gas on for just Ethereum, or is it just on the chain that they're on, or?
Yeah, just the chain that they're on. If they have all of their gas money on Optimism, then they can, or Arbitrum, they could fund that Arbitrum to main debt deposit. They could also do same chain Ethereum. It's up to them, just however they want to go into it. That Zappin feature you just saw chooses your highest balance token on any chain, and then pre-selects that as the funding asset. You can then, what it's doing now is, I don't know what's happened there, but it just looks like a route issue. But,
this is live. This is live, folks.
Yeah.
Live production.
That's just a routing issue. So sometimes like Li-Fi will not return a route for a specific asset, but it's you just have to refresh. It's just like quote engine. You just got to generate a new quote. But from the user perspective, you can then select which route you want to use. And let's just say you can override a specific one. We're also running simulations live on this to make sure that the deposit and withdrawal functions are successful. So like if this is permissionless, anybody could list any vault on Superform. Like maybe you guys deprecate a vault, they'll won't be able to then they won't be able to deposit because we'll block them after the simulation says you can't withdraw. So like we have a lot of safety features in here as well to make sure users are aping responsibly.
So people can use funds from any chain to zap into a vault that's on any chain. So you guys are abstracting away the entire experience, really. It's almost as if I can see sort of a future where this almost impacts wallet design and just makes that even more simplified for users to not even have to worry about what chain they're on. That's amazing.
It's almost easier to do this on their app than it is to do it on our app.
Yeah, absolutely.
It's crazy. Just one click and deposit in, and you don't even have to worry about minting the asset or anything. It's kind of crazy. Yeah, I didn't mean to interrupt you, Cayman. So you were saying it could impact wallets. Yeah, I could see that certainly being the case, or more features like this integrated into wallets.
Yeah, exactly. Yeah.
I see it in Rebby. I could see it right now.
Yeah.
Well,
Perfect.
we just launched early access of our API for exactly that.
Nice.
So the goal is things like Rabby. Because we're permissionless, we want every yield on Superform. We've standardized this access layer, and so the kind of piece A of helping protocols with distribution is this abstraction layer from like an app that's very crypto native. But there's obviously very different segments of the market. There's retail folks, wallet folks, institutional folks. That's where the API comes in. We have our first few customers on there, but just very early part of our program. But we'll be hopefully getting that out to folks soon.
So you mentioned a little bit about the deposit, and I assume it works the other way around. Like when you're trying to withdraw, you're basically taking the super position. Is that what you call it? A super position? You're taking your that token, you're basically depositing it, and you're getting back your principal or your funds from the main chain or wherever, from that original vault.
So you burn the superposition has multiple IDs if you have multiple vaults within your portfolio. So like it's an 1155, each ID represents a different vault. You can, again, like I said, transmute or convert that from a 1155 to an ERC20, but either way you'll burn one of those IDs on your source chain. That sends that message to the destination chain contracts, withdraws your funds, and then you can, what will happen, will draw the underlying from the vault shares. And you can also then specify which chain you want those funds to go to. So it's fully extensible. So like,
so you could start this in a transaction in Base, and your funds could end up on Arbitrum.
Absolutely. So the vault could be on Ethereum. Like you could have start from Arbitrum, vaults Ethereum, funds end up on Base.
Only on DeFi. Exactly. Can't do that anywhere else. Wow, that's crazy. And then as far as you did mention integrations possibly with an API, what are your fees? Like, what is the protocol charge for this? Like, how does that work?
At the moment, we're entirely unmonetized. The goal is that will be like referral fees with the underlying. So like, protocols that are capturing fees yourself as we drive TVL to protocols, sharing revenue there with them. Most DeFi protocols offer something like 20 to 50% referral fees on TVL based on the performance they're capturing. So it's kind of something we'll be focusing on in a later version. But like Yearn has like deposit with referral functions, and then some are off chain. So that's the primary mechanism. Yeah.
Very cool. Very cool. Wow.
And I think it's probably important for the people watching that broadcast to understand what are the risks of the FX strategies. So at the moment, there are two different strategies related to FX. There's one Morpho USDC supply strategy on our arUSD Morpho Vault. And then there is arUSD strategy that we showcased earlier. Do one of you guys want to explain how FX works and what are the risk for a stablecoin strategy? K-Mates, Cryptovester, DeFi Advisor.
Yeah, I mean, I could chime in. So FX is basically allows any yield-bearing asset to be split into two tokens. So you can have on the one side, you have a perfectly stable pegged asset, pegged to the dollar, like in the case of FXUSD or arUSD. You have, well, not arUSD, you're pegged to the dollar. And then on the other side, absorbing all of the volatility, you have the X tokens, which have up to 4.3 or 4.3x leverage. And so the X token absorbs all of the volatility, while the F token, the stable pair, remains 100% stable. And in the case of, let's say, FXUSD, the reserve asset is staked Lido or Frax ETH. And a portion of those fees, or you give up, the X token holders give up the actual staking yield, and a portion of that staking yield goes to the stability pools for the for the actual stable coin. So you get a situation where the stable pair actually earns the Ethereum yield. And so that's in principle how FX works. And so it's really novel design because it allows for a completely different peg mechanism. The risks are, we saw a really huge volatility in the last couple of days. We've always said that there's risks involved with even with FXUSD or any of our stables, but the drop that's required to really see a problem is really massive. Like we saw a 25% drop in Ethereum almost in one day, and we didn't even get into a stability mode. So it would take I think we were calculating, it would take like 50 or 60% drop to even get into that stability mode situation. So it's very, very safe, very effective.
Can you maybe, Cryptovestor, can you maybe elaborate in a few words for the new listeners who aren't that familiar about what stability modes mean, if and when it kicks in, and how it can affect the situation, even in extreme cases?
Yeah, I mean, when you're in stability mode, certain things happen. You can the F minting stops. X minting, I believe, also is shut off, right?
No, no, it's not. No, X minting is never shut off.
It's the F minting that's halted, right? Yeah, and so and also as there's liquidations, your stablecoin is basically purchasing the underlying asset. It's basically converting over to in FXUSD's case, is converting over, depending on which asset you're in, staked Lido or Frax ETH. And so or we have the other stability pool where the asset could be actually the asset you're buying is actually the X token itself. So you're actually buying the dip and buying the leverage position on ETH in that case.
So yeah, maybe to summarize it quickly. So the stable coins such as arUSD, which is used on the Superform strategy, are always perfectly pegged to the dollar, because you can always mint them and redeem them against the collateral at the Oracle price. So that makes it like perfectly pegged at all times, as long as the leverage tokens that are like the counterparty of the stable coin are still worth something. If the leverage tokens goes to zero, then the stablecoin could depeg. But to prevent that, there's the stability mode and the stability pools. And when you stake your stable coins into a stability pool, you earn, as Cryptovestor said, you earn the yield of the underlying and the points of the underlying and so on. And you earn it with even with leverage, because the leverage token holders don't get the yields and points, and they give them to the stable stakers. So that's why you get like the 6x ETH5 points and so on. But the risk you take when you stake your stable coins is the stability mode, because if the system goes into stability mode, the stability pool will end up buying the dip basically on the underlying. So you may end up buying some of the ETH5 ETH backing the strategy if there's this very sudden market move. And the good news, as you said previously, Cryptovestor, is that even during this crazy volatility event we witnessed this weekend, I was personally hoping to have bought the dip on the stability pool. And when I checked, I didn't even get, there was no redemptions at all. I mean, even with such a crazy market move, the stability pool didn't need to redeem any asset.
It was crazy.
So the good news in that is that if we ever end up bottom fishing, it's definitely going to be a crazy bottom fish price.
You're going to say, K-Mats?
Yeah, I was just going to say, just to summarize all that very quickly, the stability pools are just designed to help right size the system. It basically helps scale the system, the entire system, up or down as needed, right? So like it scales up based on just demand for the intrinsic tokens, and the stability pools just help scale it back down in order to keep the system preserved and operating successfully. So That's sort of like the nutshell of it. But as Cyril was saying, the demand for these X tokens, are really what creates the safety in the system and the stability for the system. And so you can see kind of like from sort of the action from this past week where we had like I said earlier in the show when we introduced this, the Japanese doing some squirrely stuff out there with their central banking. And so but our X token holders are just long term enough that they're just they are hodl masters, and so doing so helped keep the system safe. And everything just kept on ticking. All those stable coins that FX has with FXUSD, arUSD, BTC USD, even CVX USD, all of them kept their peg perfect. And so really, really good to see that, not just for FX but for DeFi as a whole. I didn't hear of a whole lot of other stable coins that were really going off the rails or anything like that.
Yeah,
I think that the protocols that are around now are showing resilience, and you're not seeing the major liquidation events or depeg events because the protocols are maturing to the point where they're better designed. And I think in the case of the events that happened in the past couple of days, I think Ethereum, for us to really have gone into stability mode, it would have required ETH to go to $1,200 or something crazy like that. And obviously we were still a long way from even that happening. So it really is a very, very safe system, unless Ethereum wants to take a 60% drop in like 10 minutes. Then you have the risk of liquidation starting.
Yeah, I think if Ethereum drops 60% in 10 minutes, I'm not going to be too terribly worried about my.
Yeah. We have other problems. There's other issues like.
There's going to be some stuff going on, like let's get Vitalik to a hospital ASAP, sort of a thing.
Yeah, but I like, as much as I'm really impressed by FX and other protocols who were, like you said, guys, there was a very meaningful like dip in prices and stuff definitely showed resilience. But I think the actual test is when it's bull market and huge drops come. You know what I mean? Not when it's a bear market and there's not that much money relatively into the system. Like if we would have, if protocols would have started breaking up with a dip of like 25 or 30%, then we should really would have been concerned. But at least like the small test, I can maybe call it, it definitely seemed like stuff went very smoothly. And I was actually very impressed to see that it didn't even reach a point that stability mode was even close to being activated. So I actually think that it resonates with CryptoVestor's point here about the fact that, we do see better designs, and I do think that FX is one of them. And it's very nice to see like now the new possibilities being opened up by integrating with stuff like Superform, and all of a sudden reaching like new people. So much respect, guys, for this new integration. I actually think it's a very meaningful one, and with very significant potential for us to grow. We should talk about how to really like push it out there, because I really think that this is a useful product and a useful way to use FX for new audiences.
Something else we should mention, in the past week, FX earned 33 Ethereum in fees, and I think that's pretty impressive with just volatility. So it just goes to show you what can happen when this protocol matures, and we're at $1 billion or a couple of $1 billion. So
can you guys maybe
really it's going to be a fee machine.
Can you guys maybe explain a bit on why when there's volatility, all of a sudden the revenue grows so significantly? Because recently, listen, FX is a business that definitely brings in revenue. Like even in other weeks, we usually at like at least 10 ETH or something like that a week, even at such an early stage and such an immature market. But what actually happens when there's like significant volatility, and all of a sudden the revenue becomes so much more
Well, one thing is, first of all, you have the base fees, which come from the underlying staking yield. So protocol takes a portion of the staking yield. But then when there's volatility, like we saw last week or this week, whatever you want to call it, all of the redemption, all of the different the people that are redeeming their X tokens are paying 1.5% in fees. And then you, of course, have people getting into the actual X tokens as well because they see the leverage increasing. So it just creates a trading avenue, and so every time there's these positions moving in and out, it's not like Curve in the sense that Curve charges very, very low fees for just a stable swap. In the case with FX, you're dealing with leverage tokens, which are higher demand because people want the leverage, so we charge a higher fee, and that in some cases 1.5% is a fairly big number, but it's relatively low compared to holding leverage with funding costs on other centralized exchanges. But still a big moneymaker.
There's no funding cost on our leverage tokens, so you can basically hold them for a year.
Exactly.
You won't pay anything like recurring costs. So, but yeah, there's a minting fee, there's a redeeming fee. But if you made a good trade, like this fee is probably nothing for you.
Now, can you imagine FX 2.0 when we got fixed leverage tokens? I mean, the demand for that is going to be off the chart.
Yeah.
And now integration with Superform, anybody from any chain can get into these different vaults. So it's going to be really interesting.
Yeah, definitely. And if anyone wants to dive a little deeper into how the revenue works and how FXN or governance token works as well, because FXN is a revenue sharing token. Feel free to follow that link and just how you said use the QR code, and you'll find a complete article explaining everything there is to know about FXN. And yeah, and just no financial advice as always, but at the moment AFXN, which is our auto compounding CVX FXN, so that's gives something like 64% APR.
Nice.
And you can find it here.
By the way, Blake, I wanted to ask another thing. How many protocols are currently deployed on Superform? How wide is the range for someone who now opens the Superform app?
Yeah, we have about 30 protocols that have integrated. So pretty much anything that is 4626 can be added. We're going to be supporting other yield standards as well. So we are going to be supporting 5115, which is Pendle's yield standard. So if you guys are wrapped there or have vaults wrapped there, we could also support those. And then we recently co-authored with Maple and Centrifuge something called 7540, which is for real world assets, LRTs, anything that's asynchronous where you might have some sort of time lock or delay that helps standardize those vaults. So we got lots of options. So 30 is just the beginning.
Awesome.
Blake, we're kind of getting here down to the top of the hour, so kind of want to be respectful of everyone's time. And certainly thank you for coming on today and talking about really the amazing capabilities of Superform and what it opens up for all these protocols, especially FX. Curious if there's anything else that you want to share with folks that are listening or watching today that we have yet to touch on regarding Superform.
No, I think that's great. I think you guys asked really good questions, and glad to be here. Definitely resonate with your thoughts generally about DeFi. That I think people are really stuck in this kind of 2020, 2021 mentality about DeFi and its safety and risks and all that. And the fact that we had one of the biggest drawdowns in the last really last 10 years, I guess, in broader markets, and that affected crypto is telling the DeFi didn't break. I didn't hear any horror stories of the last 4 or 5 days about what happened. And I think, you said let's see until it's a bull market and the numbers are bigger, but I think it's a good sign. We've taken that thesis is that there's a very interesting bifurcation and kind of primitive layer and the risk layer and the access layer, and that people are starting to specialize, Morpho being a base layer, and then you guys have a strategy on top of that. That's I think how we're going to see more of DeFi evolve. And I think it's beneficial. Like there's more professionals in the space. People have been hyper focused on mechanism design and security over the last few years, and we're going to see the fruits of that this cycle, I think, for sure.
Awesome.
Yeah,
that's a great conclusion.
I mean, you definitely are leaving this space with a lot more Superform bulls than you started. So this has been really productive for us to learn about it and educate folks on it, and very excited. If folks want to learn more about Superform, please feel free to check out their Twitter. I believe the handle is what is it, Blake? At Superform XYZ.
Yep, you got it.
That's their Twitter, and then of course from there you can get on their app and their Discord as well, I'm sure. So
and there's a link in the YouTube description because this is streamed on YouTube as well, and it can be watched again, obviously. And there's a link in the YouTube description.
Fantastic. All right, so for our core contributors on this call for Protocol FX. Let's hear it. What's the alpha for this week? What do you got? Let me hear it. What's your best stuff?
He's the guy that should be answering it probably. And
I'm waiting for CryptoVestor. He's sitting on
that's how he's
pretty
hiding.
good.
I mean,
Yeah, guys, give me
I've been
some.
spilling the beans about FX 2.0 and these new X tokens, which are going to have fixed leverage. And I think, I hear that it's already going to be going into audit this week. So looks like we should have these new versions of these X tokens and a new user interface too for FX to make it easier to get in and out of these products. It's going to be really interesting to see, what a 10x, X token looks like. And we're even looking into things like something called a liquidation break, which is kind of a form of a soft liquidation. So it's going to be really, really cool. I think it's going to be huge. I think there's going to be a lot of demand for these types of tokens, and it's going to be used throughout DeFi.
There you go. Yeah, he's
There's the alpha.
Alpha so beta, it's practically omega.
I hear September is the month, so we're close.
All right. Well, we will keep our eyes peeled for that. We'll keep our eyes peeled for a Fed rate cut. We'll keep our eyes peeled to make sure there's no more shenanigans in the macro world. But until then, at least we can still use FX on really any chain we want with the Superform integration. So Blake, once again, sir, you are a wealth of information, an absolutely fabulous guest. We love having you on. So thank you again for being here today.
Yeah, thank you guys.
It was a pleasure. Thank you, sir.
Absolutely.
Thanks.
All right. Thanks, everybody else.
Yeah.
We're signing off. We'll see you next time.
Take care, guys.